In the early 2000s, America was drunk on optimism. Owning a home wasn't just a goal. It was proof that you'd made it. Banks encouraged it, politicians praised it, and TV ads promised your own house, your future. Easy credit made everything possible. If you wanted a home, the system found a way. Families signed papers they didn't understand. Agents smiled, bankers nodded, and everyone believed the same lie, that prices would rise forever. For a while, it worked. Construction boomed, profits soared, neighborhoods grew overnight. But the higher a bubble floats, the louder it pops. It started with a dream. Everyone wanted a home. Banks wanted profit. Investors wanted more. And for a moment, the world believed in one simple rule: housing prices never fall. But they did, and when they did, the entire system came crashing down. The banks didn't stop there. They discovered something even more profitable: selling the debt itself. Thousands of risky home loans were bundled together and sold to investors worldwide. They called them mortgage-backed securities. From the outside, they looked solid: colorful charts, perfect ratings, smiling CEOs. Inside, a ticking time bomb. Wall Street had found the perfect illusion: high returns, zero accountability. If one person defaulted, no problem. The other 1,000 would pay. Until they didn't. The more loans banks gave out, the more profit they made. Wall Street demanded more mortgages, so banks went deeper, lending to riskier and riskier people. And as greed took center stage, the system turned into a casino, where everyone thought they were the house. Money was everywhere. Traders shouted across glowing screens, celebrating record profits. Banks competed to invent new ways to multiply risk. CDOs, swaps, leverage, financial weapons with fancy names. Everyone played along. The credit agencies, who were supposed to warn investors, sold their silence for fees. They stamped toxic products with a golden label: AAA. Investors across the globe, from pension funds to foreign banks, trusted those 3 letters more than common sense. As long as the charts pointed up, no one wanted to look down. Wall Street went wild. The more loans they created, the richer they became. It wasn't finance anymore. It was a casino, and the music kept playing, faster, louder, unstoppable. Then, something strange happened. Houses stopped selling. Buyers disappeared. For the first time, prices fell. It started small. A missed payment here, a foreclosure there. But behind the numbers were real people. Families realizing they owned homes worth less than their debt. The dominoes began to fall. And on Wall Street, confusion turned to fear. Investors called banks asking, "How much are we exposed?" The answers came back, unclear. The market that once seemed unstoppable was quietly breaking apart. By 2006, the dream began to tremble. People started missing payments. Home values stopped rising. Suddenly, those who bought multiple homes realized they couldn't sell them anymore. It was like a game of musical chairs, and the music was about to stop. September 15th, 2008. Lehman Brothers, one of the oldest banks in America, filed for bankruptcy. 158 years of history erased overnight. Markets froze, phones rang endlessly. Traders stared in silence as red numbers flooded their screens. Confidence, the invisible glue holding the world economy together, dissolved. Banks stopped lending to each other. ATMs emptied. Global trade slowed to a crawl. It wasn't just a crash. It was a full-scale collapse. The heartbeat of money stopped. And in boardrooms, one question echoed: who's next? Behind the headlines were millions of stories. Families packing boxes, walking out of homes they thought they'd grow old in. Children leaving bedrooms now marked foreclosed. People who never gambled on Wall Street lost everything. The system had promised safety. It delivered ruin. Unemployment soared. Savings evaporated. And trust, the one currency you can't print, was gone. Somewhere, a banker blamed market conditions. A worker blamed luck. But deep down, everyone knew it wasn't the market. It was us. The government stepped in. Trillions were poured into the banks to keep the world from breaking completely. Officials said it was the only option. Too big to fail, they called it. But on the streets, people watched in disbelief. The same banks that caused the disaster were being rescued, while millions went homeless. Politicians promised reform. Bankers promised lessons learned. But as the dust settled, the bonuses returned, and the system quietly rebooted itself. Governments rushed to rescue the banks. Trillions of dollars in bailouts poured in to stop total collapse. The very people who caused the disaster were saved. But the people who paid the price were everyone else. In the aftermath, there were hearings, investigations, and documentaries. Everyone wanted someone to blame. Was it the bankers, the politicians, the dream itself? Truth is, it was all of them. And all of us. A global web of greed, denial, and willful blindness. We built a tower on sand and acted surprised when it sank. The crisis didn't just expose corruption, it exposed human nature. After the dust settled, the world asked, how did this happen? And the answer was simple. Everyone wanted the party to never end. The ripple effects spread worldwide. Europe's debt markets cracked. Asia's exports slowed. And everywhere, people began to question the system they once trusted. But memory is short. Years passed, and markets recovered. New bubbles formed: tech, crypto, housing again. History didn't repeat itself exactly, but it definitely rhymed. The same greed, the same illusion of control, the same belief. This time, it's different. And once again, people said it, but it never is. Because in the story of money, Greed always comes back for more. The 2008 crisis wasn't just an economic event. It was a mirror held up to humanity. It showed us how fragile our systems are, how powerful belief can be, and how quickly it all unravels when trust dies. From its ashes came skepticism and rebellion. Bitcoin was born, a symbol of defiance against the old world. But even that, in time, became another market of greed. Because the truth is timeless. When profit becomes the purpose, collapse becomes the consequence. And so the story continues. Another bubble, another dream, another fall. Because in the end, greed never dies.